Now, using our same example with this real estate agent or this real estate professional, I want to talk about how, as a real estate professional, you can unlock a lot of tax strategies as being a real estate professional. What is a real estate professional? A real estate professional is someone who works primarily in the real estate industry. So think of an agent, a brokerage, property manager. You build homes, you do fix and flips, wholesale. What else am I missing? Construction, right? In that case, you are a real estate professional. And a lot of real estate professionals tend to like real estate, right? I don't think that's a shocker, right? You are in the real estate industry, so you kind of understand how rentals work. You understand the math behind rentals. But we want to start to unlock a lot of the tax benefits of rental properties, okay? Now, what are the benefits of buying rental properties? One is that rental properties typically and historically have appreciated with inflation. Inflation is anywhere between 2 to 3 to 4%. So rental properties tend to follow that inflation, that appreciation. Not always, depends on the location as well. The second benefit is that rental properties can provide some sort of rental income depending on the expenses of the rental property and all of that, but it typically provides some sort of income. And the third reason why rentals are so sought out for is because it provides a little bit of a tax benefit. Okay? Now let's dive deeper into this whole tax benefit thing. When you buy a rental property, either a short-term rental, long-term rental, or a commercial property, the IRS allows you to depreciate this property over 27 and a half years if it's a residential property, or 39 if it's a commercial property. What does that mean? What does depreciation mean? Depreciation is a non-cash expense that you get to write off every single year for 27 and a half years. Great little benefit, right? Now, a lot of you are thinking, shoot, I have 27 and a half years to fully expense that property. That's a lot of time. I'm going to be dead by the time I can fully depreciate this property. So what a lot of people do to accelerate depreciation, they will perform a specific type of study. It's called a cost segregation study. Okay, are we following so far? We have losses every year through rental properties through depreciation. It takes a very, very long time. It's a straight line depreciation. And some people don't want to wait 27 and a half years to fully expense their rental property. Some of these real estate professionals want to take the losses immediately in the year where they place the property in service. So what is a cost segregation study? Very quickly, is a third party comes into your house and they'll perform an analysis and say, I think this part of the house, this flooring over here, we can separate that. There's fixtures and lights, we'll separate that. We have some HVAC system over here. We have the paint. We're going to separate all of this. And by separating these asset classes, we can capture depreciation quicker. Okay? Now that might not make sense, but let's just stick with me. So when I buy this rental property over here, and let's say it's worth $500,000, I can, if I do the cost segregation, I can accelerate the depreciation anywhere between 20 to 40% of the value of the basis of the property minus the land value. That equals the loss I can take in the rental property that specific year, which can be huge. That can be 100K, that can be 200,000, right? Depends on a lot of things, but you can accelerate that loss in the first year. Okay? So let's say, for example, I did the cost seg and now I have 100K in losses. And over here, I have 100K worth of real estate income through my brokerage, through my business. Because you are a real estate professional, and there's some rules to it, you can completely offset your losses with the depreciation in real estate. And if you have a high marginal bracket, that's saving you 30, 50, 100K sometimes in taxes by doing this. Why do you think people who are in real estate buy properties every year or two? Okay? That is why. If you guys remember, here's a real life example. If you guys remember Trump versus Hillary back in 2015, taxes got leaked and Hillary was like, well, you didn't pay any taxes. And Trump was like, well, that makes me smart, right? All Trump did is he took the depreciation from his commercial property in New York against his income and he wiped out his taxes, right? And Trump was like, well, that makes me smart. And they were going back and forth with Hillary. Remember, Trump was like, well, you and your cronies put that into the tax code. I'm just using the tax code to my benefit. There you go.